Valens Research, Uniform Financial Analytics.
What Atlassian is really interesting about is it's not just a story of uniform accounting ROAs. It just highlights how distorted as reported EPS is, right? This is wild. You've got a company that on an as reported basis, you think that earnings fell from negative 47 cents-ish 2 years ago to a negative $2.67 last year. In reality, they had, by the way, in reality, they had positive earnings, not negative earnings. They threw off $1 2 years ago, and they threw off $1.40 last year. But also in reality, earnings was growing. Earnings wasn't declining. Earnings rose for this company. And as reported, we tell you you've got a negative return business that they're not even getting closer to the inflection positive. They're not even getting closer as they scale up the business to actually turning profitable, right? You think about startup firms, and what do you want to see in a startup? For a startup, you want to see it inching closer to profitability as it scales. You want to understand the contribution margin is positive for the business. On an as-reported basis, you look at Atlassian, you look at Team, the ticker, right? And you'd see a company that is losing more money as it scales, and you'd run away. In reality, what we can see is, firstly, Atlassian isn't losing money, it's making money. Secondly, as it's growing, it is massively expanding. It grew its earnings by 50% last year. And its earnings are forecast to grow even more this year, right? On a uniform accounting basis, this is a profitable business, and it is a stable, high ROA business, right? We look at Atlassian here on a uniform accounting basis, and we go, oh, yeah, it's trading at a 58 times PE. By the way, not 120 times PE like as reported metrics reflect. It's trading at 50 times, but that makes sense. It's growing at 30 to 40% a year, and returns are stable, high return, and remarkably strong. Look at this. I look at this chart and I say the market, all the market's pricing in this company to do is in a very high growth space to continue to grow, which it can, with stable returns. That passes a sniff test to me to say, yeah, that kind of business should earn a premium PE. You look at the as reported metrics and you go, I've got negative returns that are declining and I'm trading at 100 plus times. It makes no sense. Right? And that's the problem with as reported metrics. They do not represent economic reality, right? Any CFO, any CEO would tell you that they are a accounting exercise. GAAP and IFRS accounting statements are a accounting compliance exercise. They are not meant to represent what real performance is for a business. It's only when we make these changes, only when we remove the distortions, that we can see what economic reality is. And it dramatically changes how we think about these businesses.
Valens Research, the world's leading source for uniform financial analytics.